What everyone believes about J.P. Morgan saving America in 1907 is wrong, and the real story is way more disturbing. Imagine Wall Street in total freefall, banks collapsing like dominoes every single day, people rioting outside locked bank doors, losing their life savings. Even the titans of finance who built this system were powerless to stop the bleeding. The official story blames reckless speculation and a few crooked bankers. That explanation is convenient. It's also misleading, because the real trigger was one man systematically dismantling his own financial empire piece by piece to expose how broken the system actually was. Let me show you what was actually happening behind the scenes. While everyone focused on stock market crashes, America's entire banking system was running on trust and handshakes. Banks were lending 10 times more money than they actually had, ignoring every warning sign. It's like building a skyscraper on quicksand and acting surprised when it starts sinking. J.P. Morgan knew this. He'd been watching smaller banks play with fire for years, using depositors' money like chips at a casino. And then someone made it exponentially worse. On October 16, 1907, the Knickerbocker Trust Company collapsed. Within 48 hours, panic spread to every major bank in New York. By October 22nd, the damage was irreversible. People were literally sleeping on sidewalks outside banks, praying they'd get their money before the vault emptied. Here's the twist. Morgan could have stopped this on day one. He had the resources, the influence, the power. Instead, he watched it burn. Why? Because he understood something terrifying. The only way to save democracy from corrupt bankers was to let everyone see how dangerous they'd become. This is when Morgan locked every major banker in his library. For 12 straight hours, everything hung in balance. And the decision made in this moment created the Federal Reserve, transferring power from private bankers to a central system accountable to the government. But here's what still affects you today. This event is why we have federal banking regulations and the Federal Reserve. The policies created then determine your interest rates, your mortgage, how much your savings are worth right now. And the people who caused it, most walked away wealthy. Meanwhile, ordinary Americans lost everything and spent decades rebuilding. The bankers got bailouts disguised as stability measures. Financial crises aren't accidents, they're patterns, and we keep pretending each one is unique when they all follow the same script: reckless greed, systemic denial, preventable collapse, and the little guy paying the price. Drop a comment on which economic disaster I should explain next: the 1929 crash, the 2008 meltdown, or the tulip mania that bankrupted Holland. And subscribe, because I'm breaking these down every week.